They revised upward for the second half of this year, which is good because the U.S. economy continues to surprise on the upside, surprise all of us actually. But I think there's an expectation that policy rates, a historic increase in interest rates by policymakers and central bankers around the world will start to have a real negative impact next year, and the market rates have backed up pretty substantially over the last month or so. It will have an impact.
But they are still projecting anemic growth for the next couple of years. They may have revised this second quarter, but it's still not looking good.
No, I think they described it as limping along. No, we need a pro-growth agenda, and I don't think we talk about that enough here. We're more about diagnostics than we are about solutions, and I think we need to talk about how do we get the private sector, how does my industry play a pivotal role in growth, in capital formation, and raising living standards. That's what we should be talking about.
I want to focus on debt for a moment. We at CNBC keep a close eye on your debt report. In September, you projected another increase in global debt levels to about $300 trillion. It's such a high number, it's even hard to say at some points. I just wanted to ask you, given all the challenges that we have affecting the global economy at this stage, are we in for even a worsening picture when it comes to public debts?
Indeed, we've increased global debt by 100 trillion over the past 10 years. That's a huge delta. We're now at 340% of GDP, 300 trillion plus, large numbers. I feel better about it if we could find a way to jumpstart growth. But if we continue to grow debt faster than we grow our economies, eventually we're going to have problems. And in some jurisdictions, we already do have problems. And in the U.S., we're at full employment. We're running deficits to GDP of 7%. That's historic and not sustainable.
I'm glad you brought up the issue of the U.S. economy because, of course, huge focus now on their own debt levels. We're talking about $30 trillion of debt, also significant. And yet there's a lot of political uncertainty at this stage from the U.S. Are you worried about the fiscal trajectory of the United States economy?
Indeed, I am. As I said, 7% of GDP at the top of the cycle, full employment. What happens when the cycle turns? Close to $2 trillion in debt this year. And the political system is lumbering along. We need leadership in Congress. We need leadership out of the White House. And no one is talking about medium to long-term solutions. Throw on top of that an aging population, trust funds that will be depleted in a decade. It's time for real serious action. We just don't see it.
And of course, we have the upcoming election in the United States as well. Could that make things even worse from a U.S. economic perspective?
No one wants to talk about bad news or put in place contractionary fiscal policy in an election cycle. We have elections in a variety of places, including in the UK next year, India, Mexico, Taiwan. So next year is a huge year for elections. You typically don't get sober fiscal policy in an election cycle, in an election year.
So that's also your projection for the United States. I would like to ask you about what Fitch mentioned earlier this year. They essentially downgraded their rating on the U.S. economy specifically, but the markets seem to have ignored that information. Were the markets wrong?
I think the markets are starting to wake up, and I think they were more short-sighted than we typically, learn in graduate school. I think they're now starting to realize, just look at just sheer supply and demand, that in fact the system, the trajectory is not sustainable. And we're starting to price in a different outlook in terms of debt, which I think is right. The backup in rates, I think, makes sense. We need to get our fiscal house in order. But again, we need to do it also with a pro-growth agenda. And I wish we'd talk more about growth here at the IMF World Bank meetings than just about debt.
But how can governments focus on growth at this stage when they're facing high inflation, higher interest rates? Where's the scope to provide growth?
Entrepreneurs, businesses, business capital formation, look for ways to unleash the private sector, create jobs, capital formation, rising living standards. My industry is ready to intermediate trillions for climate-related reasons, for transition, for climate resiliency, but just manufacturing services. I think we need to talk about growing the economy rather than talking about the distribution of the economy.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.